Long-term care isn't just a health issue, it can become a major financial and family decision. Hi, I'm Rob West. Most of us will never need extended care, but wise stewardship means planning for possibilities before they become a crisis. Nathan Sanow joins us today to help us understand long-term care, what insurance can and can't do, and how to build a plan that protects both your finances and your family. And then it's on to your calls at 800-525-7000. That's 800-525-7000. This is Faith and Finance Live. Biblical wisdom for your financial decisions. Well, our guest today is Nathan Sanow, president of MasterCare and LTC Consumer. Nathan has spent more than 2 decades in the insurance industry, helping individuals, families, and financial professionals navigate long-term care planning and find solutions that fit their needs. I know this is a topic that so many of you are thinking about. Perhaps you have one of these older policies and you've experienced premium increases. Maybe you're thinking about the need for long-term care coverage or insurance in the future. Well, today's the day. We're going to cover some really important information for you. Plus, Nathan's going to stick around and take your questions today. So questions on this topic of long-term care planning and insurance are going to be prioritized today when you call 800-525-7000. That's 800-525-7000. Nathan, great to have you with us.
Thanks. Glad to be here.
Nathan, when people hear long-term care, their minds often go straight to the cost of insurance. But I know you say the conversation should actually start with something much broader, and that is a plan. So why is having a long-term care plan the most important step?
Well, it's important to have an idea of what you're going to be looking at, and as far as what your care needs are going to be, what your family situation is going to look like. And to have that before the need comes. The better plan to have is the time before you need it. And so being able to talk as a family and as a couple, if you're in a relationship, what does that look like for each other so that you're prepared when the event that does happen?
Yeah. Yeah. Now, of course, insurance is only one tool. So the broader plan really covers a whole host of issues, right?
Yeah, absolutely. Insurance is what we talk about is insurance is a part of that or could be a part of that, but really having an overall plan. So things like if one of you needed care, where do you want to receive that care? Is that going to be at home or in assisted living facility, whatever? Who do you want to provide that care? If that's a family member, how is that going to be able to work? So for example, I'm 6'3" and my wife is 5'2". If I needed care, she's not physically able to care for me in a tangible physical way. And so being able to have those discussions, and then if that care is needed, how is that going to be paid for? Do you have an asset you can liquidate? Is that also something that you're planning for with insurance, that kind of thing?
Yeah, that's really helpful. And a lot of people, Nathan, assume that Medicare, Medicaid, or traditional health insurance will cover those long-term care expenses. So I'd love for you to shed some light on what those programs actually pay for and where the biggest gaps show up.
Yeah, so this is a very, very common misunderstanding is that people just assume, well, some insurance, somebody pays for this. I don't have to. Health insurance does not pay for any kind of care. And let me define what long-term care is. Long-term care is caring for yourself with basic activities of daily living when you're unable to do that. So it's, bathing, eating, dressing, that kind of thing. So health insurance pays for doctor visits, surgeries, prescriptions. Medicare, the same thing. Now, Medicare does cover a short-term stay, but the requirement is you have to be in the hospital for 3 consecutive days, get admitted from the hospital directly into a skilled nursing facility. Think of like rehab for a stroke or that kind of thing. And then that only covers 100 days. And then there's no coverage outside of that for Medicare. Medicaid does cover long-term care, but it's a government welfare program. And you have to spend down to $2,000 of assets to be able to qualify for that plan. And then if you do, in many states, there's a waiting list. So great, you qualify for it, but there's no facility available to be able to provide care for you.
Yeah, and so those are important distinctions. So that then leaves the opportunity for long-term care insurance to fit into the overall plan. When we come back with Nathan, we'll talk about where long-term care insurance fits. We'll talk about what a typical policy costs. We'll also talk about the underwriting process and why it's important that you match the carrier you approach for underwriting with your physical and health conditions. That could be a big mistake if you don't approach that correctly. He's here today to answer your questions. 800-525-7000. Stay with us.
The opinions offered during this program represent the personal or professional opinions of the participants, given for informational purposes only. Any information provided is not intended to replace advice from a financial, medical, legal, or other professional who understands your specific situation.
Great to have you with us today on Faith and Finance Live. We're talking about planning ahead for long-term care. Nathan Sanow is with us today. Nathan is really an expert in this area. He's the president of MasterCare and LTCconsumer.com. He's spent more than 2 decades in the insurance industry, and really a significant part of that specifically around this idea of long-term care planning, both for the individuals and families, as well as serving financial advisors as well. And if you have a question today on long-term care insurance, how it may fit into your plan, how you should approach an older policy that maybe you can't afford any longer, or you're thinking about whether it's the right fit for you, call right now. We'll be taking those calls on long-term care and long-term care insurance beginning here in just a moment. 800-525-7000. That's 800-525-7000. Nathan, before the break, you were talking about where the gaps are specifically related to long-term care and Medicare, Medicaid, and traditional health insurance. So with those gaps in mind, this is really where long-term care insurance can fit into someone's overall financial plan, right?
Absolutely. Yeah. The insurance really becomes that funding mechanism. And there are a number of different kinds. There's some that can be guaranteed never to increase in rate. There's some that can last your entire lifetime. There's some you can get for just a year. And it really becomes important to decide, okay, what kind of coverage, what kind of budget and features do you want?
Yeah, really important to consider all of that. So cost is a major concern, of course. So just give us a sense of what long-term care insurance typically costs today and how someone can structure coverage to fit within their budget depending on where they're at.
Yeah, so if you look at our sphere of insurance, it's like anything else. You could buy a car that's going to be $20,000. You could buy a car that's $250,000, depending on what you want. But generally, women are about 30% more than men. And the reason being, look at any kind of care setting, there's more women than men that are using it. And for an average policy, traditional long-term care, a man in their 50s, mid-50s, which is very typical, is going to be about $2,500 a year. And for a woman for similar coverage would be $3,000, $3,500 a year. But again, there's lots of ways to structure it. You can buy policies that are paid up over time. So you pay it, or in 10 years it's paid up, or a single premium, you want to write a check and just get it over with. And once the policy's paid up, you can't ever get a rate increase. And then there's other policies that are easier to qualify that cover just for 1 year of care, which for many people is adequate. It just depends, again, your budget and what's the problem you're trying to solve for.
Yeah, based on the averages that you're aware of, what is the typical length of time somebody who needs long-term care, skilled care, who qualifies based on these activities of daily living, the duration that they would typically need that?
Yeah, so the most recent statistics are about a couple of 65. Once people reach 65, 52% of people are going to need professional long-term care in their lifetime for at least 90 days or more. So that's the rough odds. For men, if they're on claim, the average claim's about 2.5 years. For women, it's about 3.5 years. Now, the difference is 20% of women that are age 65 and above today are going to need long-term care for 5 or more years. So the question is, which one are you of those people? And that's why getting a plan that works, not just today, but in the future when you're on fixed income, is very important that you can plan for.
Yeah. Nathan Sanow is here today. He's with LTCconsumer.com, president of MasterCare. This has been his area of expertise for a long time. And in the next segment, we're going to begin taking your calls and questions on long-term care planning and long-term care insurance. So if you have a question, now's the time to call. We do have a few lines open at 800-525-7000. That's 800-525-7000. Nathan, I know you and I have talked previously just about this idea of the underwriting process and why it's important to be underwritten by a company that might look favorably on your health condition. Talk about the importance of that.
Yeah, and if there's one thing that I would have people take away, it's if you're looking at long-term care insurance, please work with somebody that this is their area of expertise. And the reason being is you really get one bite at that apple. And we tell people that you're going to pay for the insurance with your money, but you're going to buy it with your health. You're going to qualify it with your health. So some insurance companies will accept diabetes, some will not. Some will accept certain cancers, some will not. And the reason that's important to qualify with the right carrier is every insurance company will ask, have you been previously declined for long-term care insurance? And if the answer is yes, the chances of getting that other insurance company to reconsider you is very small. And so that's why it's really important to work with somebody who knows, okay, you've got this health condition, these medications, we're going to apply with these companies that are more likely to accept you than someone who just applies with, a company not knowing otherwise.
Yeah. Now, with a site like LTCconsumer.com that you have, how does that get factored into a search process when you're using an online tool?
Yeah, so we've got all kinds of resources for people that are available online. The other part, we actually helped co-develop with an AI company, a underwriting tool. So my sales team can literally work with someone on the phone in real time and put in medications and prescriptions and medical history, and it'll ping each of the carriers that we work with. There's like 10 of them to say, yes, no, maybe this could be a fit, this isn't a fit. And so that's some of the technology that we bring to bear. But the underwriting process can be quite complex, and that's why our specialists, this is all that they do.
Yeah. Well, and that seems like a big deal because to your point, if you get denied just simply because you have a carrier that looks less favorably on your particular health condition, that could really create problems longer term for you to get a policy you truly need, right? Exactly
right. And that's why my encouragement is if you're going to work with somebody, a financial planner or whatever, ask how many of these policies have you written in the last year? What carriers do you work with and represent so that you have the best chance to get a policy and you're not unknowingly painted yourself into a corner that you can't get out of?
Yeah. When we come back from the next break, I want to talk about the timing because I know a lot of people wonder about the ideal time to consider a long-term care insurance policy, particularly while they're balancing health eligibility, which over time there's a greater risk that you could, have a health condition that would be prohibitive. Also, just the cost of coverage and where you're at and making sure that it fits into the budget. And then of course, we get so many questions from folks on, they've got a policy, perhaps it's an older policy, maybe with one that has features that aren't even offered any longer, and yet they're seeing these dramatic increases. Why is that happening? And how should they approach that if they're getting to the place where they've been priced out of the market? It no longer fits in their budget. These questions and more we'll tackle with Nathan Sanow just around the corner. We'll also begin to take your questions. So if you have a question today on long-term care planning, long-term care insurance, this is the day. Nathan's a Christ follower. He's also the president of MasterCare and LTCconsumer.com. He's our go-to guy on this topic, and he'd love to tackle your questions. The number, 800-525-7000. This is Faith and Finance Live. We'll be right back. Stay with us. Yeah, the majority of Americans will need some form of long-term care. The question is, how will they pay for it, especially with rising costs? Skilled care, nursing home care can run $10,000 a month, if something's going to erode your assets in this season of life, it's most often going to be the need for long-term care, skilled care that is very expensive. And the question is, how do you fund that? Do you self-fund out of assets? Could it drain your assets and you be dependent upon Medicare? Do you consider a long-term care insurance policy? That's what we're talking about today with Nathan Sanow. He's the president of MasterCare and LTCconsumer.com. We're taking your calls as well today, specifically on this topic at 800-525-7000. Whether you're considering a policy or you've had one for a while, Nathan can help you resolve your questions. 800-525-7000. Let's go to Hollywood. Gloria, you'll be our first caller. Go ahead.
Oh, thank you. What a timing. The Lord sure gives me what I need. Right now, I'd like to know, I'm 80. I'm pretty healthy, though I do have a pacemaker and some heart conditions. I would like to know if it's too late to even think about long-term insurance and start paying, and who would I see? And if it's still not too late, where would I go to get it?
Yeah, great. Nathan, love for you to weigh in on this, and then we'll talk specifically about the ideal age to consider this. Go ahead.
Yeah, nice to meet you, Gloria. So I'm trying to think. Most policies, the max issue age is 74. I think one is 79. There might be some annuities that are available after up to into your 80s, but that would be about it. So once you get above 75, your options just from an age perspective, let alone a health, really become few. And so I would have you go, to either my site or other sites to see what options are available. But I believe there's some annuities that'll issue age over 80.
Yeah. What about your assets, Gloria? What do you have available that you could use to fund long-term care if you needed it down the road?
Well, I've worked for a church for 20 years, and I have an investment there. But I would say, with my home being free and clear condo, I have about $300,000, maybe $350,000, and I'm not 80 yet. I still have 35 days.
Okay. Yes.
So that's very important, actually. So with insurance, you can do something called save age. So you can basically, within 30 days of your birthday, if your birthday was last week, they'll allow you to apply basically as your younger self. So at 79, I know that gives you more options than at age 80. So that would be something to consider. At a $300,000 asset range, I would tell you that you're best off, unfortunately, to probably keep your assets that you have in insurance, because the cost at your age, the insurance gets more expensive every year that you buy it. So 79 will be less than age 80, for example, but it just gets to be very expensive. That cost curve, once you get after 65 and especially in your 70s, is very steep. So I would tell you that you should do some estate planning with an estate attorney to be able to structure your money more advantageously should you need it.
Yeah, great advice. Gloria. I'm sorry, go ahead.
I understand, and I really knew that it would be quite expensive, but it's worth looking into. And now that you said that, I'll have to. So actually, I have a Christian attorney, so maybe he would know more and to shoot me in the right direction. Or do you have a site that I should go to?
Well, there's resources on our website, LTCconsumer.com, that you can look at. We don't partner with a set because the state attorneys are so varied by geography and jurisdiction. So we don't have a partnership that way. But I would go to your friend who's an attorney and see if they have any referrals. But I would focus on a Medicaid estate planning attorneys. There's attorneys that specialize in that, and they can help advise you.
Very good. Gloria, thanks for your call today. We'll head to some more phone calls here in just a moment. The lines are filling up. We do have room at the moment, though. If you have a question specifically on long-term care, you can call 800-525-7000. Nathan, building off of Gloria's question, let's talk about the ideal age range to consider a long-term care insurance policy, and what are those asset ranges where it really makes sense, where we're not just counting on Medicaid, or we can just obviously self-insure. I'd love for you to deal with both of those.
Yeah, so the average age, what's been interesting is we have more and more people coming to us in our 40s, which is still very small, but more people, I think they're seeing the issue with their parents who are older. But the general consensus is in your mid-50s, 55, in your 50s range. It's the most opportune time health-wise. You generally don't have as many chronic health conditions, and the cost is more reasonable. Certainly before age 65, just because that cost curve, like I said before, can start to escalate pretty quickly. As far as assets, it really is dependent upon that family and that person. What we're seeing in the trend are people with significant assets. We had somebody apply that had an $80 million net worth, and they bought a very generous policy. It was $400,000 because it basically was a hedge. They said, okay, hey, this could cost me a couple $1 million or more, and it's just easier for me to buy a policy and kind of insure this risk and offset it. Even though I could self-fund it, it allows me to use my assets for other things that they wanted to. But generally, we tell people under 10 million, more than 250, 300,000 is kind of the spot where most people could consider it. But again, we're seeing more and more affluent people interested just because the cost of care that they want to receive. If it's home care skilled, it can be $25,000 a month today. And so if they want that level of care at home, which they can get, it's not going to come inexpensively.
Yeah, makes sense. Nathan Sanow's here today. He's president of Master Care and LTCconsumer.com. When we come back, more of your questions. Nancy wants to know about the difference in care between someone who has a policy that will pay for it versus Medicare. Also, can you attach it, long-term care, to an annuity? And then what other features are available with some of the modern policies? We'll also get to how we address older policies where you might be experiencing premium increases and perhaps close to having to drop it. That and more with Nathan Sanow after this. 800-525-7000. We'll be right back. Thanks for joining us today on Faith and Finance Live. I'm Rob West. We're talking long-term care planning and insurance today, and we're taking your calls and questions at 800-525-7000. Nathan Sanow here. He's president of Master Care and LTCconsumer.com. And Nathan, just real quick, at LTCconsumer.com, there is a search tool for somebody who wants to consider a policy of this kind, right?
Yes, absolutely. There's all kinds of resources and search to see what coverages cost, what options and features are available. And then we have a team of LTC specialists that can shop the market for you. And so they meet with each person individually and directly to help understand what their concerns and budget and questions are. And one of the things that is important to us is not everyone needs long-term care insurance, but everyone needs a plan. And so if we've done our job to educate them having a plan, and if insurance is part of that, great. But if not, that's fine. But making sure that person really has their plan in place should that ever need come arise.
Yeah, exactly right. I have some more questions, but let's get back to the phones. Jessica in Miami, go right ahead.
Hi, my question is it better to have the long-term care?
I have some more questions, but let's get back to the phone. Oh, hey, do me a favor, turn down that radio for me and continue with your question. Go right ahead.
Sorry, sir.
That's okay.
Is it better to attach that long-term care to an annuity or just leave it as standalone? Another thing is that is it better for me to get it at work? We have that as an option, or get my own in case I leave my job.
Great questions,
Thank
Jessica.
you.
Nathan, go ahead.
Yeah, so as far as the annuity is concerned, there are a number of new annuities, literally, that just came out in the last year that allow for what's called a 1035 exchange. So if you have an existing annuity, you can transfer the assets from that annuity into a long-term care annuity, and it can create a lot of taxable advantages because long-term care is one of the most tax-advantaged insurance products that the government allows. So it's not a taxable event. Benefits are always tax-free. If you have any gain in that annuity, it would be no taxable event on that. You would gain all of that in the long-term care and annuity. So that's certain. If you have an annuity, that's certainly something to look at. When it comes to long-term care at work, there's really two sides of that. You will get a much better policy on your own individually, just like you would life insurance. You could get a better structured policy if you went through underwriting than if you bought it at work. The advantage of what you get at work is the ease of enrollment. Generally, underwriting is less than that. Than what you would have to go through, or it's just guarantee issue. But the policies are not nearly as flexible as an individual policy. So that's the trade-off, is to look to see what options you have at work. It might be guarantee issue, you just get it because you're an employee, but the options may not be as flexible or robust as what you may be looking for on an individual side.
Nathan, that's really helpful. Just to build on that for a second, what are some of the newer features that are available on these policies that maybe didn't exist even a few years ago?
Yeah, so one of the great features that all policies include is a care concierge service. I've gone through this personally with a family member where it was a care event, and oftentimes that care event can happen quite suddenly. And the family is thrust in, I need to get a medical bed. I need to get grab bars installed. I need to find care at home, and all these things that come up. And, most people don't know where to go. And so the insurance companies provide a care concierge service that, as a policyholder, not just for them as a policyholder, but their entire family, that they can access to say, okay, this is where you get equipment. Here's where you can find these contractors and that kind of thing. The other thing is that the care setting, the older policies sometimes didn't pay the same for home care as they would for going into assisted living or facility. Now all of the policies pay the same. So if you want to get care at home, which is the majority of where most of us would want to get care, it pays the exact same as if you go into any facility. And the last one is we have some policies that pay cash. It's the ultimate flexibility, where if you qualify for a claim, they pay your benefit. You can pay your spouse, neighbor, kid, whoever to provide your care, where most other policies require a professional home care or home agency at home, or a licensed home care or a facility that you go to.
Yeah, really helpful. We're taking your questions today on long-term care insurance and long-term care planning for Nathan Sanow, 800-525-7000. We have a few lines open. If you have a question, perhaps you have a policy that you've had for years and years, you're wondering how to deal with it, or some of the features Nathan just mentioned, you can call right now. We'll try to get to as many calls as we can today. Let's go to Zephyr Hills, Florida. Nancy, go ahead.
Yes, I'd like to ask, what is the scenario of a person who's on Medicaid needing services as opposed to the person that has the long-term health policy? And also, what happens to the premiums if you die without using that policy, if you do have it?
Yeah, great questions. Nathan?
Great. Yeah, so on the Medicaid side, so Medicaid is government welfare program. And so one of the challenges that you have is not every facility will accept Medicaid. And those that accept Medicaid, quite honestly, you may not choose that if you didn't have to. And so your choices are limited. We had a family friend, for example, that was on Medicaid and went into a facility that was an hour and a half away from where she grew up, and the family had to transfer, and it was a shared room with somebody that was having more emotional problems. And that's just what you had, because that's where the government, pays. The other thing is the Medicaid reimbursement rates are significantly under what the actual cost of care is. And so it's very difficult for the care facilities to provide that same level of care under Medicaid reimbursement. And what was your second question?
What happens to the premiums that you've paid into your policy if you die abruptly and you don't need the long-term health care?
Yeah, so there are options with policies that you can get a death benefit. So it can be either a true insurance benefit, like $100,000 you didn't use your policy, or it's called return of premium upon death. So you can add that to a policy that says, I had the policy for 20 years, I put in $30,000 and I passed away suddenly and never used a claim. And then all of the money I paid into that policy would get paid to a beneficiary of your choosing.
Nancy, thanks for your call today. I think one of the key ideas there is, when you add these features, they're nice, but they do add expense to that premium.
Exactly.
It's going to be more expensive. The other approach is just to look at this kind of like you do with your term life insurance or even your homeowner's insurance. You have it to offset the risk. You hope you don't have to claim, but you're paying for it and you're getting a valuable benefit to have peace of mind for your family, right?
100%. Yeah, traditional long-term care insurance, which is what has been around for 30 years, is by far the least expensive, most flexible, cost-effective way to solve for long-term care. And you're right, Rob, we get this all the time where people say, well, gosh, I paid on it for 20 years and I never used it. Well, that's not a very good deal. Okay, well, I've owned a home for 30 years. Am I praying that my home burns down so I can say, hey, I got my benefit? No, that would be a terrible thing, but you have insurance just in case.
Yeah, it's good stewardship at the end of the day. Well, we're going to take a quick break here. When we come back in our final segment, we'll get to more questions. We do have room for maybe one or two more in addition to those holding 800-525-7000. Nathan Sanow is here today. We're talking long-term care insurance and long-term care planning, and we'll continue just around the corner. Stick around. Great to have you with us today on Faith and Finance Live. I'm Rob West. We're talking long-term care insurance today. More than 50% of Americans will need long-term care at some point in their lives, and it can be very expensive. And the key, as our guest Nathan Sanow said, is you need to do long-term care planning. Everybody needs to do that. Many could use long-term care insurance to offset this major risk that we have in this fourth quarter of life. LTC Consumer is where he's president, and it could be a great resource, not only in terms of finding a policy, but also just education, ltcconsumer.com. Let's head back to the phones. Amanda in Illinois, go right ahead.
Hi there. I have a question about what could be used to self-insure. So I know that you've talked about this in the past. I don't know if it was on in the first segment, but I'm wondering what a couple would need if they wanted to have enough in an IRA or 401k that they could be sure to not need the insurance, but to be self-insured moving forward when they hit retirement.
Great question. Nathan?
Yeah, so the first step would be trying to decide what kind of care do you want? Who's going to provide that care? Are you going to need care? Or you want care at home? Is it going to be provided by a family member? How does that impact their life? Do you want a daughter or a friend or whoever to care for you? Do you want a professional to care for you? And then understanding how much that costs. So, for example, an average 8-hour-a-day home care person, professional coming into your home in Illinois is probably around $6,000 a month, $5,000 a month. And so if you think, okay, if one of the two of you is likely going to need that, and that's going to be 3 years on average, let's say, what is that number? And by the way, that's the cost of care today. I would put a 5% inflation option on that over time. And so then you can start looking at, okay, that number is $500,000, $300,000. What asset do we want to tag to be able to say, should we need that? This IRA or this account is tagged for that. Should I need it?
Yeah. Does that make sense, Amanda?
It does. And I was wondering, you're talking about long-term care insurance, and right now it sounds like it's about $10,000 a month. So you're saying that you would have to look forward another 5%, adding 5% to that once you finally retire. That's what you would need, and then for 3 years. I'm talking about the replacement instead of the insurance.
Yeah, so the average claim in the United States today is about 82. And so if you were 65, let's say today, or 60, and then you would need to put your inflation rate. If you wanted to use something a little more conservative than 5%, it would be 3% to say, okay, if the cost of care. So, for example, if you wanted a facility, I'm going to be in a memory care center, then the question, okay, I want a private room, for example. Okay, that's going to run you $10,000 a month, give or take, roughly where you are, knowing what that cost is, and then projecting that forward to say, okay, if I had to pay for that for 2 years, okay, that's $240,000 today. What does that look like at age 82? What assets do I have available at that time that then we can kind of earmark and say, here's what we have. Now, interestingly, a financial planner that we work with says something for his clients that self-insure is they hold back because they've spent a lifetime saving, investing well, and doing the right things, and they have this asset, and then they're afraid to enjoy it because it's like, well, I don't know if we do need long-term care. If we do, then we need it, and they don't enjoy their full retirement, where he sees his clients that have a policy can then say, hey, I got that protected with insurance. I can go take that trip. I can go do that thing. I can enjoy what I've built.
Yeah, it makes a lot of sense.
Trade-off.
Amanda, thanks for your call today. To Augusta, Georgia. Mary, go ahead.
Hi, thanks. This is a timely conversation. I just retired at age 65, and I've had this long-term care policy probably for 20 years. It's with Genworth, and I've just been paying that. I know. I think they got bought out by a Chinese company.
No, they didn't. Yeah, no, it didn't go through. Yeah, there was that was good. Going to happen and didn't. Yeah.
Okay, awesome. So the annual premium this year was $4,800 and some change, but to keep it around that amount, I decreased the policy from 8 years to 5 years. And so I know the policy is going to go up every year, but what's the best way to sort of manage that cost as it goes up? Do I just need to pay it?
Yeah, this is a great question. And rate increases, unfortunately, are the black eye of the industry. And my own policy has gone up 120% in cost since I've owned it. And it's important to understand how a rate increase can happen. So it can't go up every year. The only way a rate increase can happen for everybody that's sold, it's a federally regulated product, is they have to go to the insurance department, in your case in Georgia, and say, hey, we misunderstood something. Our interest rates aren't returning us what we expected. Our claims are higher than we expected, whatever the case may be. And ultimately, the state insurance regulator is judge and jury. Do they allow any rate increase to happen? And then if they do, what amount are they allowing to happen in that case? And so then if that happens, you're really given three choices. One is you can take the rate increase, keep everything the same that you have, and pay the new premium. The other one, they have to give you an option to say, I want to keep my costs the same, and I need to amend my benefits. And then the final thing is they basically, whatever you've paid in the policy, you could say, I'm out, and they're going to give you a little policy worth what you've paid up in benefits. The important thing to know at any time, you can always reduce your policy. You can always go to any insurance company if you have a long-term care policy and say, hey, this is getting too much, or what are my options to reduce that benefit and reduce the cost? And that's available to you at any time, and they'll give you different scenarios. I would encourage you to be counseled by someone that knows that market to give you trade-offs to say, okay, here's different ways to structure it, but you can always lower your benefits if you choose to in the future to save money.
Yeah. Does that make sense, Mary?
Yes, it does. And then one of your other callers was talking about what happens if you die before you use the policy. Do you have to specifically make that request to have that as a part of one of your benefits to get some kind of compensation?
Yeah, that's an additional, that's an optional benefit that you can add to your policy at the time that you buy it. So you can say, hey, I really want this feature. You're going to pay, to Rob's earlier point, is significantly more expensive because you're guaranteeing you're going to get your money back one of the way, either in benefit or reimbursed to you at the time of death. But that would be at the time that you bought the policy. You couldn't add that after the fact if you wanted to, unfortunately.
Okay, but anyway,
very good.
Basically, you're not going to get anything. All right, thank you so much. I appreciate it.
Thank you so much for your call, Mary. We appreciate it. Mimi in Tennessee was not able to hold Nathan, but I'll just read her question. She's on Medicare Plus with United Health. She's wondering if she switches plans, how long would it take for her to be able to apply for long-term care through another organization like LTC Consumer? She's 63 and wondering approximately how much does long-term care cost at her age?
Yeah, so Medicare and long-term care are two totally separate things. Medicare is really retiree health insurance. And so it doesn't cover long-term care benefits, just in a very niche, small that we talked about if you're admitted from a hospital and for a very short window. So you can apply if you have Medicare, doesn't matter what policy you're on, you don't have a long-term care benefit. So you can look at long-term care insurance at any time. At age 63, again, it goes back to the features and benefits that you want in a policy. You could get a policy that would be very robust, probably for as little as $2,500 a year for a one-year policy, or maybe $2,000 a year for a one-year policy. But you could spend significantly more if you wanted, lifetime unlimited policy with all the bells and whistles. So it really just depends on what you're looking for.
Very good. Last question quickly to Tennessee. Teresa, you'll be our final caller. Go ahead.
Yes, thank you so much for taking my call. I love your all show. It's so informative. Just a question. My mom has paid for a long-term care policy forever, had a stroke in January, so she's been in a skilled facility and unfortunately still there. We were hoping to get her home. But they told me that the policy only covers a skilled care or an assisted living, pays a little bit less at assisted living. But is there any anything that we could look at that would be able to convert that to home care that would pay something toward a home care policy if it wasn't originally set up that way?
Yeah, Nathan?
Unfortunately, insurance policies are kind of a picture in time that you bought it. It's very difficult to change them or add. You can always reduce benefits, but adding benefits is much more difficult in the future with most all insurance policies. So you're kind of stuck there. You can get an annuity. So there's a company called Equitrust that sells an annuity that's a single premium policy. You can add money over a couple years, but it will pay a structured benefit if someone's actively receiving care. And that can be a benefit if you've got another annuity. Maybe there's taxable growth in that you can convert over. It's another way to kind of give predictable income, because if you get that annuity, they're going to pay X amount of dollars over the lifetime of that annuity, and there's a death benefit should they pass in that time. So that's another option that's there.
Excellent. Teresa, thanks for your call today. Nathan, man, we covered a lot of ground today. So appreciate you. Again, what can folks find at ltcconsumer.com?
Yeah, they can find a helpful website on education and a team of specialists that can shop the entire market for the consumer to help them find the best value and option. And again, our goal is everyone needs a long-term care plan, and insurance may or may not be a part of that, but at least having that plan in place is.
Well said. Thanks for your time today, my friend. We appreciate it.
Absolutely. Thank you.
All right. That's Nathan Sanow, president of ltcconsumer.com and MasterCare. To learn more, visit that website, ltcconsumer.com. Big thanks to my team today, Josh, Tahira, Taylor, Omar. Faith and Finance Live's a partnership between Moody Radio and Faith Fi. Come back and join us tomorrow. We'll see you then. Bye-bye.